prices are going up because there's a lot of demand, producers are going to be very happy because what that's going to allow them to do is make a profit, and they reinvest their profit to increase supply. And that lowers their marginal cost of production. In other words, it costs cheaper per water bottle if you make 1,000,000 water bottles than if you make 100,000 water bottles. So that marginal cost of production declines with the more supply that you have to produce. So the cure for higher prices is higher prices, because higher prices make producers more profitable, which allows them to expand supply, lower marginal cost of production, and then lower the front end facing price. But by selling more units, they end up being even more profitable. So if inflation was actually happening because of the reasons that they're saying it's happening, we would be seeing GDP growth that we've never seen before in this country. But we want to see prices go up. We want to see increased demand. We want to see profitable producers who can lower their marginal cost of production, lower prices, and sell more units. That's a healthy economy.
Perhaps the most important thing is that these higher treasury yields are showing through to higher borrowing costs for households and businesses. And those higher costs are going to weigh on economic activity.
We just broke $1 trillion in interest rate expense. Jay Powell knows it. The higher yields are coming through as higher costs. The second thing he said was how it's going to weigh down on the economy. If you're a company and you create a product and there's a lot of demand on that product, let's say you create like a million units, and now like after 2 weeks, you already sold half of the amount of units that you produced, and the orders keep coming in. Well, you have to find a way to reduce demand. So what does the company do in order to fight off demand? They raise the price. That's how you fight off demand. So how does this weigh on the economy? This doesn't weigh on the economy with lower prices. Look, when a company sends you a coupon for 10% or 20%, they're trying to create demand by lowering the price. So if he was fighting prices and lowering prices, he would be making the economy hotter. That's not weighting down the economy. That's propping it up. What he's saying is it's going to weight down the economy. How does it weight down? Well, higher costs pass through the cost structures into businesses and families and to government. It's going to push prices up. And as those prices get pushed up, that's how demand gets dampened. So he is literally telling you verbatim that what they're doing is causing the prices to go up. But at the same time, he's telling you, because the prices are going up, I'm going to keep raising those interest rates. I'm going to stay higher for longer. He got caught right there, revealing the number one problem in their strategy, which is we're trying to fight higher prices by causing higher prices.